All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Thursday, everybody. Today is August 21st, 2025. The top story this morning is Walmart. Well, if you go and you Google Walmart earnings in the news right now, you're going to get a mix of headlines. It's going to be pretty hard to figure out what's going on. You're going to see Walmart shows health of the consumer with revenue beat, or you're going to see Walmart earnings miss, or what Walmart tells us about the economy. Look, Walmart posted numbers that were mixed. It was a top line revenue beat, but a bottom line earnings miss. So, how do we figure out what the heck is going on with Walmart here? And it's very simple, guys. Walmart has, rich people are shopping at Walmart. That's the takeaway this morning. And look, that sucks. All right. I mean, not to sound snobby or anything, but rich people shopping at Walmart is not a sign of consumer strength. It's not a sign of health in the economy. It's a sign of people becoming increasingly desperate, doing things that probably a few years ago would have swore they never would have done. Case in point, let's talk about it. It was a revenue beat. All right. They are taking in more money. They are selling more stuff. Same store sales growth, phenomenal numbers from Walmart in same store sales growth, up 4.6% year over year. Now, keep in mind, we just got done yesterday talking about Target's earnings down 1.1%. And we saw Home Depot and Lowe's also saw lackluster same store sales numbers, either negative or not keeping pace with inflation. So Walmart's 4.6% same store sales, fantastic numbers there. And Sam's Club, also a Walmart company, even better, 5.9% year over year growth at Sam's Club. So, people are coming into Walmart. They're selling more stuff. Does that mean the consumer is strong, right? Obviously, right? No, it doesn't. Because of the big earnings miss. Walmart made just 68 cents a share, while the market was expecting 74 cents a share. That's the rub there. Walmart making less money, profit margins getting squeezed on higher revenue. They're capturing market share at the expense of their earnings. Now, is this a good business decision on their part? Only time will tell, probably. But at the end of the day, what's really happening, and Walmart's CEO said it on the earnings, that these gains were seen across all income spectrums, including upper income households buying groceries at Walmart. Guys, that is not a sign of health. You are going to see some people on CNBC and Bloomberg today try to spin it as a sign of a resilient consumer. It's not. All right. This is a very, very much a 2020s bingo moment. Formerly wealthy people who had good, high-paying jobs, who lost their full-time job. Now they work multiple part-time jobs, right? We've seen this in the non-farm payrolls data, and now they're buying their groceries at Walmart. There is an increasingly small percentage of the population that is doing well here. More and more people are being forced to buy their food at Walmart here, guys. And that, look, this goes on top of everything we've seen. Walmart has been the beneficiary to date of this decline in consumer health. We've seen, the big box retailers are really struggling here. We're seeing people trade down to more affordable options here. Not a good thing. We also got a lot of trade headline going on this morning. First of all, the EU-US trade deal. We finally have pen starting to meet paper. There's been a lot of criticism of these deals, not deals being announced, because they're basically just tacit verbal agreements and a handshake. And, sometimes when the rubber meets the road, deals tend to look a little different than when they were initially announced. Well, the U.S. and EU are finally formalizing their agreement here. And, there's some interesting developments. There's a lot of numbers being thrown around. But the big one here, the big takeaway from this story is that Europe needs to legislate away their tariffs on U.S. goods before the U.S. is willing to lower their tariffs on the EU goods, as was promised in the deal. Basically, we're not just going to lower your tariffs on the pinky swear that you're going to lower ours. You lower yours first, and then ours go down. So that's kind of interesting to see that happening this morning. Also on the trade war front, we've got Boeing is in talks to sell up to 500 jets to China. That's an interesting story as well. The Chinese have not been buying Boeing jets for years. And if you want to wage a trade war on the United States, not buying Boeing jets is one of the easiest ways you can take a chunk out of GDP. As a matter of fact, I said that very thing yesterday on the live stream when we were talking about that strike at Airbus in the UK and how this might be an opportunity for Boeing. If Airbus is going to have trouble meeting deliveries, maybe Boeing can swoop in here and try to recapture some of that market share. And then a day later, we hear that, well, Boeing is in talks to sell up to 500 jets to China. But you know what? We still got this trade war going on, and we still have very high tariffs on the Chinese and all this stuff going on with semiconductors. We're a long way from selling 500 jets to China. Let's just put it that way. But at the very least, they're talking. Boeing is reacting favorably to that this morning. And we got a hilarious story about NVIDIA. Yesterday, Commerce Secretary Howard Lutnick was in the news. I'm not sure on what platform he was, but he was basically talking about how the H20 are these like neutered, weaker versions of the chips, and we're only selling the Chinese the junk. And well, it looks like the Chinese may have taken that a little personally. They're upset because China has now restricted sales of NVIDIA's H20 chips in China. That's kind of hilarious because, look, NVIDIA created the H20 to circumvent export controls, which they weren't following anyway. Put a pin in that. We'll be back to that subject in just a second. But they created the H20 for China, and then the Trump administration said, nope, you can't sell the H20 to China. NVIDIA stock took a little bit of a hit. They took, I think it was a $5 billion loss in their second quarter earnings or first quarter earnings because of that. And then they came back and they're like, all right, we'll let you sell the H20 to China, but you got to give us 15% of the revenue. Then Howard Lutnick goes on TV and says the H20 is kind of a piece of junk, but we'll sell it to the Chinese anyway. And well, apparently the Chinese they're a sensitive mighty dragon this morning because now they're saying, well, we don't like what your Commerce Secretary said, so now we're not going to let you sell the H20s to us that you didn't even want to sell to us a couple of months ago. Well, that's kind of hilarious. NVIDIA's caught in the crossfire. Is this going to really materially affect NVIDIA's earnings? Probably not, but I just find this story rather hilarious. And speaking of NVIDIA and chip sales to China, I got to send a shout out once again to Gamers Nexus, big channel on YouTube. They produced a wonderful 3-hour-long documentary about the grotesque violation of export controls by NVIDIA and others into China. One eye open, one eye closed was the Chinese saying that kept getting repeated over and over again. In other words, NVIDIA is turning a blind eye to rampant export control violations that rises, in my opinion, to the level of treason. And the reason I'm bringing this up, as Mr. Sunshine pointed out in the comments earlier before we went live, thank you so much, Sunshine, for the tip. The Gamers Nexus documentary on the black market for NVIDIA chips in China has been taken down by YouTube because of copyright violations. The channel was given a copyright strike and they took down the video. I can tell you, Gamers Nexus spent a lot of freaking time and money producing that documentary that shows rampant fraud, abuse, corruption by a almost $5 trillion company. And Google took it down because of a copyright strike, because of some stupid technicality. All right. And look, if you think Google, who is one of the primary beneficiaries of this AI bubble, Google stock has done very well here. If you think big tech is just going to quietly allow people to tell the truth about this bubble and not push back, well, you're crazy. And so I will, after the show, because I just found out about it before we went live, I will put a link to the Rumble video where Gamers Nexus documentary on China's black market NVIDIA chip sales is still available. So once again, shout out to Gamers Nexus. Shame on YouTube. Shame on Google for taking that video down. Pretty disgusting, guys. Fraud and abuse. It's so rampant now. This bubble has been created by accounting fraud, by export control violations rising to the level of treason. It's going to go down in history as just an absolutely shameful period in Wall Street and Silicon Valley. It's going to be worse than the dot-com bubble, in my opinion. And the fact that they're trying to suppress the messaging, I wish I could say I was surprised. Thanks again, Sunshine, for the tip. Also, speaking of the golden age of fraud and stupidity, Fed Governor Lisa Cook, we've got President Trump is pushing for her resignation after FHFA, whatever, the housing guy in the government, Bill Pulte, accused her of mortgage fraud. And she's saying, no, I'm not going to resign. I'm not going to be bullied. So, you got your little like Fed independence thing going on there. Okay. We've got the dramatically lowered bar for political prosecutions in the United States, something I warned you guys about years ago when we were like, oh, nobody's above the law, 34 felonies, and let's prosecute people we don't like for things everybody freaking does. And I warned you, it's like, hey, if you're going to do it to this guy, you can do it to anybody. Well, they're doing it to anybody now. Go figure, that's how that works. And the fact that this fraud, this residency fraud going on in mortgages is so freaking common because the government threw so much easy money at the housing market that millions, and I do mean millions of people, have committed this mortgage fraud. Well, you throw all that in a blender, you hit power, and you get this story about Lisa Cook. Is anyone above the law? No. Should we have a low bar for political prosecutions? No. Should people be allowed to commit mortgage fraud? No. Should the housing government be so heavily involved in the housing industry? No. A whole bunch of no's. This is such a nope story, but that's going on as well this morning. Meta froze their AI hiring. Is that the AI bubble popping? Probably not, but Meta was getting a little drunk with their spending on talent for AI, reorganizing there. We've got James Hardie. That's the high-end siding manufacturer, Hardie Plank, Hardie Boards. I actually got the stuff on my house. James Hardie stock collapsed 35% on earnings yesterday. Another sign of weakness in the housing industry. And the icing on the cake, we got some data this morning that the market did not like. Initial jobless claims and continuing jobless claims both increased, came in higher than expected. There's your stag. And then we got the Philly Fed Manufacturing Index came out. And, well, that gave us deflation. It wasn't the index itself that I'm so worried about. It's that prices paid number. Stuff got a lot more expensive. That is in line with that PPI number we saw last Friday. That kind of triggered this little bit of a sell-off in tech that we've seen for the last few days. So you got your stag and deflation in the data this morning. Guys, we have got a lot to talk about here. How about we shrink my big melon of a head? Let's see what's going on in the world of finance today. Don't forget that like button and that subscribe button for the YouTube algorithm so you can come back tomorrow and have your coffee with the melon heads because we do this one every single day. And right now we have got the S&P 500 is negative by 26 points or 0.41% in the black. It's been, or in the red, I should say. It's been kind of grinding lower all morning here. The Dow is also down here 173 points or 0.4% lower. Now, the Dow has held up pretty well during this sell-off. We've had a little bit of rotation out of tech and into the value names in the Dow. It is not helping this morning, however. The NASDAQ leading the way lower, down 0.4%, 93 points in the red as the sell-off enters its third, or I guess that'll be its fourth day now. Meanwhile, the dollar is a little bit stronger this morning, 98.34. That is 0.08% higher here. We possibly have a little bit of Fed expectations shifting off of some of that labor data that came out just a few moments ago. Looking over at the bond market this morning, we have got a lot of green here. The 30-year Treasury, 4.924. That's higher by 2 points. The 10 years at 4.320, higher by 2 points and change. The 2 years at 3.769, higher by 2.5 points. And the 1 month is lower by 0.5 point at 4.334. And then looking over at the commodities, we got a mixed bag. Spot gold is lower by about $5.60, $3,343 for spot gold. That's off by about 0.17%. Spot silver is hovering right below that $38 mark, $37.99. That's higher by about 8 or 9 cents this morning, or 0.22% to the upside. I like the shiny. We've got copper is lower by 0.14%. Platinum is off by 0.25%. Palladium down 1%. And crude oil is pretty much unchanged here, $62.66 for October WTI futures. And looking over at Bitcoin, we're kind of right back where we were yesterday morning. Bitcoin had a little bit of a bounce yesterday. It wasn't much, but here we are, $113,178. Off by about $1,000. Bitcoin has now sold off almost 11 grand from its all-time high. And that sell-off that began with that higher than expected PPI reading last Friday. All right, now let's talk about the big one this morning. This consumer news. Walmart stock falls after earnings miss forecasts. After earnings miss forecasts as U.S. sales and 2025 outlook rise. That's a messy headline. There's a lot going on there, all right? Walmart stock falls as earnings miss forecasts. All right, that's the takeaway here. It was an earnings miss, but then, okay, U.S. sales and the 2025 outlook rise. You'd think that would be bullish. It was very much a mixed bag for Walmart here. Walmart stock fell more than 2% early Thursday after the company reported second quarter earnings shy of expectations, while U.S. sales growth topped forecast, with the big box retailers' low price strategy drawing consumers as tariff-related uncertainty pushed them to more carefully scrutinize their household budgets. Now, there actually was some mention of tariffs in Walmart's earnings call, which was pretty surprising because Target, Home Depot, Lowe's, we didn't get a lot of tariff talk on their earnings call. Walmart did address it. To make it short, Walmart said, look, they said some things we are absorbing those tariffs. In other words, some things the prices aren't going up. Other things we're trying, which basically said, no, the prices are going to go up on other things. So this whole will tariffs be passed on to the consumer or not? It very much remains a case by case basis. It's not so cut and dry that just automatically going to be passed on. Mostly because these retailers understand that if they raise those prices, they're probably not going to sell this stuff because consumers don't have any freaking money. In the second quarter, total U.S. same-store sales grew by 4.6%. That's more than the 4.2% Wall Street predicted per Bloomberg consensus estimates. Its wholesale subscription business, Sam's Club, saw the same metric grow 5.9%. The Street had forecast 5.3%. Phenomenal same-store sales numbers here from Walmart. Right, they are gaining market share. We're seeing Target decline in same-store sales while Walmart rises. People are not shopping there and they're shopping here. But there is a but here. Walmart stock came under pressure after the results showed the company reported adjusted earnings per share of 68 cents, below the 74 cents the Street had forecast. So Walmart is squeezing their profit margins in order to achieve that revenue growth and that same-store sales growth. They're taking the hit to profitability to gain market share. And that's going to be the big takeaway in this tariff thing. The companies that are able to avoid passing those costs on the consumers will gain market share, but will their profit margins allow them to sustain that? That's going to be the rub over these next few years as these tariffs add up. Revenue came in at $177.4 billion. That's better than the $176.05 billion the Street had expected. Now, this was the operative paragraph here. This one pretty well summarizes what happened. Walmart called out strength in grocery and health and wellness categories, driving its U.S. sales growth. More people buying their food and their bathroom items at Walmart. Again, not a sign of health. And the company said it saw its share gains across income brackets, led by upper income households in its U.S. stores. Rich people shopping at Walmart. 2020's bingo update, guys. There it is. Across income brackets, led by upper income households. That's the title this morning. Rich people are shopping at Walmart. And look, Walmart stock not looking so hot here. Let me adjust my screen. Down 2.17%. Looks like right now shareholders are more focused on that EPS number, that 68 cents versus 74 expected. They didn't like that. And that is overshadowing the revenue beat and the nice same-store sales numbers there. All right, let's shift gears to the trade war. EU and U.S. reach an agreement on a joint statement outlining the trade deal. So they're finally putting something down on paper besides shaking hands and playing nice for the cameras. The U.S. and European Union took next steps to formalize their trade pact, detailing plans that could reduce tariffs on European automobiles within weeks, while opening the door to new potential discounts for steel and aluminum. The joint statement issued Thursday represents an advancement of the preliminary deal announced a month ago, including specific benchmarks for the EU to secure its promised sectoral tariff discounts on cars, pharmaceuticals, and semiconductors, as well as new commitments for addressing the bloc's digital services regulations. Those digital services regulations is a reference to the, say 3-4 times a year, the European Union just gets together and decides Big Tech America owes us $10 billion, $5 billion, $3 billion. They have their Digital Millennium Copyright Act that's created quite a nightmare for internet companies. But here's the big takeaway from this story. For example, Trump already imposed a flat 15% rate on most European goods. That's half of the 30% he'd previously threatened. But the U.S. promise to extend that lower levy to autos and auto parts now hinges on the EU formally introducing a legislative proposal to eliminate a host of its own tariffs on U.S. goods and provide preferential market access for some U.S. seafood and agriculture products. In other words, Europe, you got to lower your tariffs first. We're not going to settle for a promise here. We want you to legislate away those tariffs, and then we will lower ours. So that is the big development in the EU trade front today. And we talked about this one here. Boeing is in talks to sell as many as 500 planes to China. Boeing is heading closer toward finalizing a deal with China to sell as many as 500 aircraft, according to people familiar with the matter, a transaction that would end a sales drought that stretches back to U.S. President Trump's last visit in 2017. Chinese officials have already started consulting domestic airlines about how many Boeing aircraft they'll need, the people said. The transaction taking shape is similar in scope to the order for as many as 500 jets that China's central planners have struck with Airbus, but haven't yet announced. Now, there is a chart here on this article. Let's zoom in, make it a little bigger here. You can kind of see this is from 2024 going all the way back to 2010. In yellow, that is the number of Airbus planes the Chinese have been buying. Now, you can see they've been pretty steadily buying Airbus all throughout these years. They have taken a downtick since the pandemic, but that black shade there, that is Boeing. And you can see in 2018, the Boeing sales dropped off a cliff to be virtually non-existent in the 2020s. And so a deal for 500 Boeing aircraft would see that black bar return to its former glory. And I would point out you got the gray and the blue. That's other plane makers, but pretty much Boeing and Airbus makes up the lion's share of the commercial aviation industry. And Boeing stock is liking this news, up 1.4% ahead of the opening bell, $228.40 for shares of Boeing. All right, this story is just hilarious. China turns against NVIDIA's AI chip after insulting Howard Lutnick remarks. Beijing has restricted sales of NVIDIA's China-specific AI chips after U.S. Commerce Secretary Howard Lutnick made comments that officials found insulting. Somebody get a tissue for the Chinese officials. Chinese regulators, which include the Cyberspace Administration of China, the National Development and Reform Commission, and the Ministry of Industry and Information Technology, are now trying to discourage domestic tech firms from buying the H20 processor. Well, gosh, guys, I didn't know you felt so strongly about that. I'm sorry. Cheer up. I hope you feel better. I'm sorry the big bad commerce man said hurtful words. NVIDIA stock down about 0.29% on that news, $174.90. Look, I don't think this is like this isn't going to take any big chunk out of NVIDIA sales. NVIDIA already took that $5 billion hit in the last quarter. There was some hope that those H20 sales were going to come back. And this might just be more silly posturing in the trade war, but I just thought this story was kind of funny. But speaking of NVIDIA chip sales to China, once again, guys, this is showing that Gamers Nexus documentary still available on Rumble. I found out about this like a minute before we went live, so I didn't have a chance to put a link in the description or anything. But as soon as the stream is done, I'm going to put this link in the comments on Twitter, and I will pin it in the comments on YouTube, because you can still watch this video that Google does not want you to see for whatever reason, probably because if the AI bubble bursts, it'll take Google stock down along with it. Pretty shameful, by the way, that they gave this channel a copyright strike and took down this video after all the money they spent and time they spent to produce a 3-hour documentary. And it took 3 hours to show just how grotesque the export control violations in China are. Shame on Google for this. Absolutely shame on you. All right. Another story that's, well, just a big mess. Trump aims to win a majority on the Fed board with attempt to oust Lisa Cook. There's Lisa Cook. She does not look happy. Lisa is like, she's as angry as those Chinese government officials over at Howard Lutnick. Lisa does not look pleased with President Trump. President Donald Trump's campaign to oust Federal Reserve Governor Lisa Cook, if successful, would give him the opportunity to exert more influence over the U.S. central bank by securing a majority on its 7-member board of governors. Trump made it clear he wants the Fed to slash borrowing costs at the central bank under the leadership of Jerome Powell, has this year been subjected to a steady barrage of attacks from the White House over everything from its monetary policy decisions to cost overruns in a major building renovation project. The president on Wednesday called for Cook's resignation after Federal Housing and Finance Agency Director Bill Pulte alleged she committed mortgage fraud by lying on loan applications to secure more favorable terms. Cook, whose term extends until 2038, later responded saying she wouldn't be bullied into stepping down. By the way, the word bully is so overused today. It's ridiculous, right? Oh, I won't be bullied. All right. Look, guys, this is some Banana Republic stuff going on here, all right? And I warned you years ago. I warned you when they turned to lawfare. I said, guys, like, no, nobody's against the law. No, we shouldn't have two separate rules. This is a gray area. This is an ethical paradox. There is no right answer here, but there are lots of wrong answers. I went through this whole big diatribe about how political prosecutions are a minefield, and the world chose to ignore the threat because why? Because Orange Man bad, and they threw every possible thing up to and including jaywalking at the president, and now they're all like panties in a bunch over him doing the same thing. Well, shit, that's how this works, guys. I don't know what to tell you. Do I think we should be using lawfare to oust Federal Reserve governors so we can get more dovish monetary policy and return to Zerp and Burr and make the poor people even poorer? Abso-freaking-lutely not. No, we shouldn't. But this is what happens when you lower the bar for political prosecutions. And by the way, no, we shouldn't have two separate rules. No, government officials shouldn't be able to get away with fraud. And by the way, this fraud was created by the government getting too heavily involved in the mortgage business. I got to send a shout out to my friend Melody Wright, my fellow doomer. Melody was all over this story years ago. Actually, the first time I had Melody on my channel back in 2023 was to talk about this report from the Philadelphia Federal Reserve Bank, owner occupancy fraud and mortgage performance. This is what they're accusing Lisa Cook of doing. This is the same thing they're accusing Letitia James of doing. This is the same thing probably millions of Airbnb bros across the country have done. They have lied about primary residency in order to secure favorable interest rates in government-backed mortgages. In other words, they're breaking the law. Yep, that's fraud. That's a felony. And I just want to read you the excerpt from this. In January of 2023, we identify occupancy fraud, borrowers who misrepresent their occupancy status as owner occupants rather than investors in residential mortgage originations. Unlike previous work, we show that fraud was prevalent in originations not just during the housing bubble, but also persists through more recent times. We also demonstrate that fraud is broad-based and appears in government-sponsored enterprise and bank portfolio loans, not just in private securitizations. These fraudulent borrowers make up 1/3 of the effective investor population. 1/3 of the freaking population. Millions of people have done this. All right. Are we going to prosecute all of them? Are we? Because right now we're only prosecuting the people one party doesn't like. And the reason why we're doing that is because, well, you guys prosecuted them when they got out of power last time. That's how this works. That's how Banana Republic prosecutions work. Yes, it comes back to hit you in the face. That being said, fraud is so prevalent, millions of people have done it. Gee, it's almost like the government should just get the hell out of the housing finance business altogether. Hey, I just throw it out there. You guys do what you want with it. Occupancy fraud allows riskier borrowers to obtain credit at lower interest rates. These fraudulent borrowers perform substantially worse than similar declared investors, defaulting at a 75% higher rate. Oh, I'm sure that's going to work out great once the housing market turns south. Their defaults are also likelier to be strategic, suggesting that they pose a risk in the face of declining house prices. Yep. We got that going for us. God, I love that story. All right, we got a few more we got to get through, guys. We're going to rip through them. Meta freezes AI hiring after blockbuster spending spree. This one broke yesterday afternoon. Some people were getting pretty excited about this, saying, hey, maybe this is the AI bubble popping. And honestly, the phrase AI bubble and bursting of the bubble is now becoming very commonplace. It's almost like tacit acknowledgement across the board that AI is in a bubble and we're all just waiting for it to burst. All right. I mean, that's quite a difference from just a few years ago when everybody was like, AI bubble is just a Twitter rando conspiracy theory. Never mind, just endlessly buy stock. So let's note how far we've come here. But Meta Platforms has frozen hiring in its artificial intelligence division after spending months scooping up 50 plus AI researchers and engineers, according to people familiar with the matter. The hiring freeze, which went into effect last week and coincides with a broader restructuring of the group, also prohibits current employees from moving across teams inside the division. And the duration of freezes wasn't communicated initially or internally. While all of the top AI companies have hired aggressively this year, Meta has most often pushed the pace of the talent war, offering prized researchers pay packages worth 9 figures and using so-called reverse acqui-hires to strip startups of key leaders. Analysts have voiced concerns about the scale of leading tech firms' investments, with some signaling out Meta's fast-rising stock-based compensation costs as a potential threat to shareholder returns. The recent restructuring inside Meta divides its AI efforts into 4 teams, one working on superintelligence called TBD Lab. That houses many of the new hires. A second working on AI products. Okay, at least they eventually aim to sell something with this. Okay. A third is working on infrastructure, and a fourth dedicated to projects with a longer time horizon and more exploration, the people said. The latter, called fundamental AI research, remains largely untouched in the reorganization. Coincidentally, I found it shocking that there is no team dedicated to AI applications within the metaverse. We haven't seen that one yet. What happened, guys? I thought the metaverse was going to change everything. I guess not. All right. Another bad one for the housing market. James Hardie stock collapses nearly 35% after U.S. housing slump hits building materials. This one broke yesterday. James Hardie stock tumbled nearly 35% on Wednesday as the maker of high-end home siding pointed to a weaker U.S. housing market and homeowners reluctant to spend on big projects. It's the best economy ever. The stock listed in the U.S. and Australia saw its biggest one-day drop since 1973, according to Bloomberg data. The company's profit declined 28% year over year during its first quarter. Net sales tumbled 9% over the same period. Yikes, that is a crash. Uncertainty is a common thread throughout conversations with customer and contractor partners, said CEO Aaron Erter during the company's earnings call. James Hardie pointed to softer demand, citing a slowdown in single-family construction activity, especially in the southern part of the U.S. Guys, things are looking worse and worse for housing here. Be ready. James Hardie stock down 34.44% yesterday. Yep, that is a stock crash right there. Although, hey, look, silver lining. We're up 0.8% ahead of the opening bell. So we got that going for us. All right. Now let's talk about the stag and the inflation, guys. First, the stag. We got initial jobless claims this morning, and they rose. They rose quite a bit, 235,000. Not an alarming number, but that is higher than we've seen for the last couple of weeks. All right, we have been noting pretty much since June this decline in initial jobless claims. That is the slowing of layoffs. Well, that trend has reversed now. All right, so it's still not an alarming level, but we are starting to see layoffs increase. But that's not the big problem this morning. This is the big problem: the continuing jobless claims. 1,972,000 or 1.972 million. That is a new high going all the way back to the pandemic. This is up from the previous high of 1.97 million that we saw 2 weeks ago, substantially higher than the drop that we saw last week. People losing their jobs or having a hard time finding new ones, and the pace of both increased last week. All right, this does not bode well, especially in light of the pending revisions. In about 2 weeks or 3 weeks, we get the annual benchmark revisions where they come and they'll probably say, about 900,000 jobs that we reported last year never really happened. And, after the big downward revisions to the non-farm payrolls that shocked everybody and saw the statistics lady get fired, well, here's more evidence of weakening in the job market. And that's the stag. Now, how about deflation? United States Philly Fed prices paid. All right, the Philly Fed index was negative. It was just barely negative. It's not the overall index that I'm so worried about. It's the fact that the prices paid index is now so high. And keep in mind, the Philly Fed manufacturing index is keyed to 0, not to 50. So anything above 0 shows expansion. Anything in negative territory shows contraction. Not only are we above 0, but we're at 66.8. Prices paid by manufacturers in the Philadelphia region are skyrocketing. All right, now let's zoom this out a little bit so you can get a better idea of what we're talking about. Here's a 10-year chart, guys. All right, look at what the Philly Fed prices paid are doing here at 66.8. We are almost back to the highs that we saw in 2021 at the peak of consumer price inflation. We hit 82.7. Now we're still a ways away from that number, but look at the trend here, guys. We're obviously going back there. Now, this is directly in line with that PPI number that we saw last week, that higher producer price inflation. We are not yet seeing it in consumers. That is important. See also the comments made by Walmart. Some areas the consumers are going to get the price hikes. Some areas we're going to eat it. But you can see here the producers are already paying more. Some of this, we don't know how much, but some of this is going to work its way through to higher consumer prices. The question that is on everybody's mind is how much. Guys, we just won't know until we see it. But we do know for a fact that tariffs are driving producer prices sharply higher here. And that, of course, is all leading up to the Federal Reserve's decision in September. The market continues to bank on the fact that the Fed's like automatically going to cut. But this is the odds of a Fed cut right now. It's now 81% likelihood. All right. Still highly probable that the Fed cuts in September. But, we're now 80-20 here, 81 to 19. All right. This was like 99-1 before that PPI came out last week. Let's refresh this. It may have even changed again. We were 99-1 that the Fed was going to cut last week. Now we're at 79-20, 79-21. All right. So the likelihood of those cuts keeps going down as we get closer. And me and my moderator, Mish, were talking about this yesterday on the phone. We've got a lot of data points between here and the Fed. All right. We got a non-farm payrolls. We got another CPI. We got another PPI. We got that annual benchmark revisions to the prior year's job numbers where they're saying as many as 500 to 900,000 previously reported job gains might go up in smoke. What else? There's another data point we got out there too. Did I talk about another non-farm payrolls? Anyways, guys, the Fed is worried about inflation here. So really the only way we get this rate cut at this point is if we get a really bad jobs number. All right. More weak labor data will probably get a cut. But right now, the Fed is becoming increasingly worried about inflation, especially as we're seeing these producer prices rise, the PPI and now the Philly Fed Manufacturing Index, all pointing to possibly that tariff inflation working through to the consumer eventually. It's not so cut and dry. Even 80-20 here, I think the market is a little leaning too much towards those rate cuts. And, the more President Trump insists on those rate cuts, the more he goes after Lisa Cook and the other ones, the less likely the Fed is to actually give him the cuts because they don't want to be seen as acquiescing to Trump's demands. So I would not place my bets that these rate cuts are such a guarantee thing. Maybe they still happen, but I'm not willing to put money on it. Let's just put it that way. And I just want to say thank you very much to the Pasta Man. What's going on, Nashville? He says Walmart in Nash has a recording in a podcast studio in Walmart. What the hell, man? So you can go record your demo tape at Walmart. Well, am I showing my age when I called it a demo tape just now? Sorry, I guess. So there's a recording podcast studio in Walmart. Is that like right next to the Lens Crafters and the Subway and then the recording studio? Is that how that works? Jesus, somebody did a market analysis and figured out there's that many people recording in Nashville that there's demand for something. That's interesting. Thank you for that anecdata, Nashville Pasta Man, and for supporting the channel. Pandemonium Paladin gifted 5 Nobody Special Finance memberships. Thank you, you pandemonious melonhead, you. I appreciate the support of the channel. Welcome to you new melonheads. Be sure and say thank you to the Paladin. And just a reminder, guys, if you are a YouTube member, you get 1 free super chat a month. You can use that, and I will read and respond to your questions on the air. Thanks again, Paladin. And thank you to Jake's Custom Parts for supporting the channel. He says, thanks to Jack and Mods. You are most welcome, Jake. Thank you for supporting the channel. And while we're on this subject, thank you as well to my moderators who do an excellent job keeping things neat and tidy in the chat. Moderation is a thankless job, so every now and then they get some thank. Thank you, Nan. Thank you, Mish. Thank you, M and J. You guys are awesome. And thanks again, Jake. Steve Woitis, what's going on, brother? He says the history of CPUs shows everything integrates into one chip. It's probable that AMD and Intel will do the same with AI. No need for the NVIDIA coprocessors. Steve, we're a little out of my wheelhouse here. I mean, I don't know the history of chips that well, so I can't comment on this. Probable that AMD and Intel will do the same with AI. No need for NVIDIA coprocessors. Right now, NVIDIA still owns the market for GPUs. And You see that a lot in that documentary that Gamers Nexus did, which Google horribly took down. I hope they put that back up. That is such a joke. And they gave them a copyright strike too. That's going to cost them, right? Keep in mind what YouTube just did to Gamers Nexus. They took a big chunk of money away from those guys. All right, that sucks that they did that. But one recurring theme in that Gamers Nexus video was every time he brought up AMD, everybody was like, not really. Like AMD doesn't even show up on the radar in the demand for GPUs, guys. NVIDIA absolutely owns the market. Look, I take a lot of cheap shots at NVIDIA here. I do not like the company. I think Jensen Huang belongs in handcuffs. I think it is arguably the biggest financial crime in history, this AI bubble. That being said, let's not take away from how good the tech is. All right, people who know a hell of a lot more than me about semiconductors are almost universally in agreement that NVIDIA's technology is far and away the best in the world. So is AMD going to take a chunk out of them anytime soon? Probably not. Thanks again, Steve. I apologize, my own limitations here. I can't comment on the integration into a single chip. But thank you for supporting the channel, sir. What's going on, Clippy, VR Sim Racer? He became a new YouTube member. Welcome to the Melonheads, Clippy. It looks like you're trying to post a super chat. You want some help? Sorry, that's just my bad Clippy joke. Maybe some of the Gen Zers will have no idea what we're talking about because they didn't know the joy of growing up with Clippy. But thank you, VR Sim Racer, and welcome to the Melonheads. Ed C's been a member for 6 months. He says layoffs from last fall starting to show up in the data. Honestly, I think these are probably layoffs from the beginning of the year. Typically, what I've seen with most of these layoffs is people are usually offered like 3 to 4 months of severance pay when they're offered these buyouts, maybe sometimes up to 6 months. So, if you backfit that would put us around like January to March timeframe, January to April maybe. So possibly some of those government layoffs that happened early in the year finally starting to show in the initial jobless claims data. Entirely probable, but you are correct to point out the delay. When you get an announcement of layoffs, when you get a headline, they don't show up in the jobless numbers or the non-farm payrolls for several months. You don't count until those severance payments stop, and even then there's a delay. So, yeah, you're right. These are layoffs that were long ago announced. Was it last fall versus this spring? Probably a little bit of both. Thank you very much, Ed C., for being a Melonhead for 6 months. And Robert Feeds the Machine says housing has to crash because insurance and tax will eclipse real incomes. Is there any air resistance for stock values? All right, so housing has to crash. It doesn't have to, all right? There is one vector where housing never crashes, and that is a sudden massive step change higher in real incomes for people. If people suddenly get a big raise higher than the rate of inflation, home affordability comes back down to earth. All right, that it's possible. Probably not going to happen, but it is possible. So it's not a guarantee that housing has to crash. Housing probably will crash though. And insurance and tax are two very big things. All right, while home prices have maybe stopped going up or even started coming down a little bit in the last year, my friends Melody and Travis have done an excellent job documenting that. While that's been going on, the property taxes have been going up. The insurance has been going up. The insurance companies, right, that, insurance, their business model is basically banks. Well, their liabilities are increasing as the home values they're insuring went up over the last few years. So even though we're seeing prices come down a little bit, the increase in property taxes and insurance is more than offsetting that decline in prices combined with the higher interest rates. So home affordability continues to get worse. It's not home prices causing it anymore. It's previous increases in home prices leading to higher insurance and taxes. Very astute observation, Robert. Now, is there any air resistance for stock values? That's a little hard. My opinion, stocks are overvalued across the board here. Obviously, the Mag 7, big time. But, look at the Shiller PE, which is like the inflation-adjusted 10-year average of earnings or inflation-adjusted 10-year average price to earnings multiple. By that metric, stocks are historically overvalued, not quite dot-com bubble levels, but higher than GFC levels and almost dot-com bubble levels. So by most metrics, stocks are well overvalued. Is there any air resistance? Honestly, I couldn't tell you. I don't know what's supporting them now. I mean, the casino is. You've got degenerates are just YOLOing into zero DTE call options. And then, the hedging by the market makers buying the shares to offset those options that they're selling is propelling values higher. Plus, you've got passive money moving into the stock market, just people buying into their 401k. So that seems to be supporting values here. But fundamentally, earnings season hasn't been that good. It wasn't awful, but it certainly wasn't great. It certainly doesn't support historically high valuations. And, the fact that rich people are shopping at Walmart here, that's got to send a chill down spines to anybody who's paying attention to the macro. So thank you very much, Robert, for feeding the machine. And Spud Ruckus, could you describe the ruckus, sir? Says, just saying good morning. That is a fine note to end the show on. Good morning, Spud. Thank you, sir, for the good vibes and for being a Melonhead member for 10 months. Appreciate that, sir. And thank you, everybody, for having your coffee with the Melonheads this morning. Rich people shopping at Walmart. 2020's bingo. How about that? Hey, don't forget that like button and that subscribe button on the way out for you new guys. Come on back tomorrow. Thank you guys so much for all the super chats. And thank you as well, my magnanimous Melonheads on YouTube and Patreon. You guys are awesome. Links down below. Check out that Gamers Nexus video. I'm going to link it on Rumble. Shame on Google for taking that one down. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.